So I won't try and horse ride anywhere here at the moment. We'll try and get some energy back elsewhere. But thanks very much for that, Wolfgang. So as was said, my name is Cera, and I'm going to be your host for the next 45 minutes. And I'm joined on stage by our esteemed guest, Dr. Constantin Gurdgiev. So Constantin and I are very aware that we are the only thing standing between all of you, a couple of pints, a big party, and loads of networking. And that some of you have had a very long day. So we want to cover a lot, but we actually want to make it fast, fun, and interactive. I have been you. I have sat in that seat. I have felt it. So we're going to do our best. But this gentleman has a lot to give, and we want to cover a lot. So we're going to use a really fun format today that's going to be really fast-paced and informative. But before we get to that, I want to tell you a little bit more about the good doctor sitting to my right-hand side. So Dr. Gurdgiev is an economist. He is the assistant professor of finance in Trinity College here in Dublin. He is also an advisor to international clients on macroeconomics and geopolitical risks and environments in Central, Eastern, and Western Europe, with a core focus on capital markets and investments. He's actively engaged in research in finance and macroeconomics. If that wasn't enough, he's born in Moscow and he's been to no less than 4 universities. I had these all listed and it was just too long, in the US and in Trinity. You thought my 2 world records were impressive. This is more impressive. In his spare time, when he is not slaughtering government ministers, quote unquote, he is a predominant, should I say, commentator in the Irish market, and he does go at them fairly hard. He enjoys nothing more than a little bit of extreme fly fishing. I didn't know it existed. Constantin.
It's like extreme golf.
It's like extreme golf. So I don't know if that's like extreme ironing and you have to do it.
No, you usually climb up
for
the fly fishing, and that's it. That's the extreme bit. You have to climb very high.
I had visions of Constantine. Well, I won't talk about my visions of Constantine. Okay, so before we do anything else, as I said, we're going to go through a format. It's called Excuse the Interruption. It's going to be fast. It's going to be fun. It's going to be informative. Cool. But we're going to fly through a couple of topics. There's 3 stages. First one's called the rundown. Second one's called the word. And the last one is called odds. You don't really have to worry about any of that because I've got the clicker in hand. But fair is to say, we are going to take some questions, but we'll take them at the very, very end. So we're going to move quickly. So if you have an idea for a question, please hold that thought and keep your questions to the end, and we'll get the Android out to you. But feel free to heckle, feel free to get involved. I will ask you 1 or 2 questions, so let's try and make this a little bit lively as it's our last one. So without further ado, we're going to get to the first section, which is called the rundown. In this, I'm going to ask Constantin a question, and he's going to have 2 minutes to answer it. So no long, rambling answers. Thank God, says all of you. And if he doesn't answer it in time, you're going to hear this noise. Okay? Nice and loud, so he's going to be cut off, because this man is notorious to talk, because he knows a lot of stuff. Right? Good stuff. But as I said, if you have any questions, please do hold them to the very end, because we are keen to get your opinions, and we are going to fly through stuff. So my first topic is market potential. So we've discussed today and we've presented today a lot of tools so that clients can estimate market potential with a view to exporting to that market. But because we're Google and we have lots of data, they've been very Google-centric tools, things like the global market evaluator and such forth. Like, because we have this data, things like absolute search query volume. But as an economist and an advisor, what data points and tools would you use and recommend that people look to if they're looking to enter and size the potential of a market? So, and what do commonly people overlook?
Okay. People generally look at the things like the macroeconomic indicators of potential future growth. You've heard GDP and stuff like that. That's fine. You have that all. There's loads of advisors who do that and deliver it for you. Google does it as well. I mean, you've got a wealth of that information floating at you. All of that is looking into the rearview mirror, really. And it's not really giving you a hell of a lot of indication as to what's happening on the ground. In reality, a lot of businesses that I see, on the investment side in particular, fail because they don't look at risk. They look at the potential, they never look at risk. Great example this week is one of the big names, I'm not going to name it, which sold for pennies after going through A through D rounds of fundraising, raising hundreds of millions of dollars in every one of those rounds, and flopped. It flopped on the foot of being too fast and basically going too wide into the markets. They haven't thought about the risks. The other thing is, also don't underplay organic growth. Organic growth plays are brilliant. They give you revenue generation. They also give you the footprint into the market, and then from that footprint you can develop the market as well. It also connects you to your funders and the likes. And the final thing is that look for the non-macroeconomic story. Look for the story which drives the consumers and the savers and also your demographic as well. So for example, give you one example. In Europe right now, we have a bifurcation of demand. One part of demand has been shifted into debt-free younger generation, the other part into the debt-free older generation. The middle generation has fallen out completely. So if you are serving middle generation, Europe is not for you, at least not for the next 5 to 10 years. And if you are serving younger generation, then it's fine. You can also find pockets of strength across Europe. If you are for the older generation, hey, this is your world, really, because this is aging fast and they actually have an ability to spend and they're not encumbered with work and all. So that's kind of those type of things.
So Europe is old.
Europe is old. Europe is dying.
And will you name the company?
The what?
Will you name the company?
Fab.
Okay, so my next topic is Asia or America. So Gary Flynn talked about in the opening about the potential for European companies in Asia and North America. Philip, just in picking over there, mentioned about his experiences in both directions, about using a direct route to market in America, but using partners in Asia. So which region do you consider the smarter choice for EMEA exporters? So where should you go first?
Well, it depends, okay, where you are based in the EMEA and who your customer base and what your offer is, and also how financially sound you are and how well you're funded. American market is probably more, and North American market in particular, is probably more kind of, if you want, comfortable, especially with the forthcoming TTIP and a Canada agreement between Canada and Europe as well. And we have certain cultural and institutional overlaps. Asia market offers a bit of growth, but really, when we talk about regionalization, we talk about government policy regionalization. We're not talking about market regionalization. There is no homogeneity within the North American market. Ohio is different from Florida, and Florida is different from California, and God forbid you step into Quebec. So if you're looking at it from the point of view where the market is, it's really where your customer is. If you are comfortable, if you're just starting, my advice for the European exporters, try the US market and the Canadian market first, maybe Mexico as well. Then once you establish a revenue flow, once you establish some expertise and presence in the market, you diversify into the Asian market. If you're closer to Asia, where the culturally, product-wise, customer-wise offer, perhaps through your key talent as well in your company, maybe you should start there and then diversify into North American market. In reality, over the 10-year horizon, you have to be in both if you really are into the big growth story itself. You need to match your offer very closely. You know that better than I do. Again, one of the things that overlooked, and in the first question, relates to the first question, the whole issue of the cultural and institutional proximity. Large costs of compliance, especially in the sector in which I work, give you direct indication that you should be in the markets first and foremost where you don't spend those compliance. So look at the margins as well. Where the higher the margins is what you're pursuing. Don't chase the numbers of subscribers. Don't chase the numbers of people who are actually looking at your product. Chase the number of people who are willing to pay premium for your product or for your offer.
Okay, so go with it'll pay big.
Yeah, exactly. This is your cash cow, and you're after the cash cow rather than just a mass presence in terms of the numbers that Google Analytics generate.
You're doing great for time, Constantin Cigar. We haven't had a gong yet. So speaking of Asia, my next topic is the next tiger. So, we've seen tremendous growth out of companies like South Korea, or countries like South Korea and Singapore. But which Asian economy do you think is most interesting and why? So which economy will roar and soar?
Too many tigers. Tigers tend to emerge, then become Garfields, then become roadkill. Ireland is a great example, yes? Okay. So don't focus on tigers. Focus on a region which is tremendous in heterogeneity and diversity in itself, yes? There are two, broadly speaking, economies in the region. There are, well, three really, actually. Let's put it this way. Advanced economies, which we all know, which are on the dying end of the kind of demand, if you want, and adoption of the innovation and the likes, say, for example, Japan. There are middle-income economies which are tremendously interesting. You mentioned a couple of them. My probably favorite one is Chile. actually, which is also Asia-Pacific, Pacific region itself as well. And then beyond that, there are low-income economies where the growth rates are very high, purchasing capacity is very low, savings are very high, therefore investability capacity is growing faster than, say, for example, the demand. So if you are selling to the consumer, you're probably going to find those markets much slower developing, okay? But that's not to exclude the fact that there is a huge premium consumer in some of the markets, like, say, for example, Vietnam, Laos, and all. So which countries I like? On a risk-adjusted basis, and this is a very crucial issue, when you adjust your returns to going into the country on a risk basis itself, Chile is my absolute favorite, and I like also Indonesia. Beyond that, on a high-risk growth, you have Vietnam, which is probably will be very volatile, Philippines, which is always on the borderline of being volatile geopolitically, but also volatile internally in economy terms, and then Malaysia as well, which is kind of much more steady between those two and probably closer to the middle-income economies, but not by its per capita income itself, but in terms of its institutions. So tremendous heterogeneity, tremendous opportunity. That said, by the way, don't write off the likes of Korea, where the demographics is fairly adverse. It has tremendous potential in terms of the innovation and development. It also has tremendous potential in terms of the high value-added manufacturing. So if you are manufacturing in the region, that's a very interesting play for you.
Okay, my next topic is Africa. So we have a couple of people in the audience, I think, today from South Africa. Can you make yourself heard? Hello. Hello. Hey.
Welcome.
Welcome. We service South Africa. We service Africa from this office. But other African nations don't appear to be as hot from an export-import perspective as South Africa. There's much more talk about Asia and Latin America. When will Africa catch up, and why hasn't it taken off to date? Is there certain market dynamics that we as EMEA Ians are missing? So when will Africa be hot?
When will Africa be hot? Well, Africa was hot yesterday, it's hot today, and it will be hot tomorrow. I have huge interest in terms of Africa. I don't cover Africa as an analyst, but it is certainly a very interesting play from my point of view. Africa is at the focal point of regionalization of trade. We think from the Western side, from the northern side economies, developed economies so-called, or high-income economies, whatever you call us, really, or dying economies, demographically you can call us as well. We think about Africa as some sort of the kind of disconnected continent, which is separate from everyone else. But in reality, Africa is increasingly integrated in terms of trade and services flows with Latin America and Asia. And it's not just China, and it's not just Brazil. It's not just traditional kind of interlinks, which are historical, but with both continents, or, continents in terms of actually both engagement in human capital flows, financial flows, but also goods and services flows as well. Beyond that, Africa is an embodiment of what we call today, or starting to recognize today, as South-South trade. In other words, the trade and investment flows in human capital and physical capital flows, which are captured within the regions of so-called emerging economies, or South itself. And as a result of that, African potential right now, as the market is completely being ignored, especially in the likes of Western Europe. And interestingly enough, and in the United States as well, largely. You mentioned South Africa, very interesting economy, but I'm not that bullish on South Africa. I'm much more bullish on Nigeria, I'm much more bullish on Kenya, I'm much more bullish on small economies like, have you ever heard of Lesotho? Brilliant, absolutely institutional breakthroughs over the last couple of decades. Now, yes, there is up and downs and everything else. Finally, your final bit, which is very important, why don't we hear about Africa in a positive light? Well, because in the media, what sells is big stories, and big stories are thousands dying, rather than thousands and millions making better living and improving their living standards.
Okay. So my next topic is exchange rates. Much talked about today, and we have seen a very volatile currency market in the last 6 months. Gary mentioned it this morning about the opportunities for people trading in euro versus the strong US dollar. But what should exporters, or how can exporters use this currency volatility to their advantage? And what should they look out for?
Don't step into the currency market as looking for an advantage in it, okay? Think of your business as being traded close to the liabilities that you have to your suppliers and to those who fund you. And that's the currency you want to be predominantly in. time it in terms of regular treasury management and regular treasury risk management in terms of when those liabilities are coming due, build up the reserves in that. Yes, you will be generating revenue in all different currencies around the world. If you have the liabilities there, such as production chains, logistics chains, supply chain management and all in those locations, then you need some reserves. But beyond that, beyond prudent management of the treasury, do not engage in speculation in foreign exchange markets. Foreign exchange markets are probably the most volatile, period, full stop, the most risky ones, and in many cases you diversify or internationalize your operations. You enter in the countries where there is less liquidity in currencies, where the currencies can be not just more volatile, but more volatile at a spot, immediate rate, and that is unpredictable territory. So don't. Forgo the potential return from high speculative activities, focus on your business. I hope that gives some answer there.
For medium-sized companies in the audience, like where can they even start to sort of take some cautious steps? Well,
that depends on the company, it depends on your operations. You need to have a very solid advice in that area in terms of the corporate finance. You can get that from some advisors. You can't really hire a really high-end kind of treasury capability yourselves. So you will have to kind of balance it for smaller companies between outsourcing and advice to someone else. How would I seek that advice? Just as with an investment advisor, okay? I wouldn't go to one person who is advertising in the airport, even if it is a very big bank and has a lot of names
online,
to it attached as well.
Online.
Or online as well. What I would do is I would go to 2, 3, build relationship with them, have the trust established, and then start trading with them. Don't put all of your baskets and eggs into one basket, okay? So get the advice from several sources.
Okay, my next topic is manufacturing and logistics. So we mentioned earlier, Gary mentioned that roughly about 40% of the audience today are in retail. A good percentage are in e-commerce as well. Shipping physical goods has lots of barriers to entry. You have everything to deal with customs, exiles, delivery time, so on and so forth. In your opinion, is this going to change soon? Are we going to see technology helping in this space, and will borders eventually disappear? And then secondfold, the piece about manufacturing. So getting something produced in a warehouse or a factory somewhere to getting it to end user, that also has lots of complexity. How do you see that evolving in the next 5 years? So what is the future in this space?
Okay, technology always changes, and technology always arrives to facilitate, whether it's logistics, whether it's supply chain management, whether it's manufacturing. That's not an interesting story. More interesting story, what technology is currently doing, especially in the manufacturing, is breaking the boundary between the producer and the consumer. What the hell does it mean? It actually means a lot, and it implies a lot of disruption. But basic terms is, up until now, we had the producers, who were the firms, who some of you are, who looked at the consumer from the point of view of distance. Yes, you didn't know exactly what consumer wants from you. So you use the data engines, you use big data, analytics and everything else to just literally ask the consumers and mass a question. What the hell do you want in your car? Do you want 4 wheels, 5 wheels, green color, black color, or all of the above at the same time? What technology is doing today, it's actually empowering the breakthrough between the consumer and producer. The distance is shrinking. Okay? Think of 3D printing. What it does, it enables the consumer to directly order an execution of their 3-wheeled car. This is frightening for you as a producer because your power disappears of controlling the consumer, but at the same time, it empowers you producers not to worry about risk that much. Because the huge risk was, I misjudged the consumer and I produce something, but they don't want it. Even though the big data told me that they all will be dying for it. Okay? That risk will be gone because now consumer has ordered, goodbye, yes? You don't like your car with 3 wheels, well, that's what you asked for, okay? Now, in the meantime, what really is coming down, aside from the technology and aside of technological innovation, are the borders barriers. And the borders barriers are coming down on a regional basis within the regions. They don't necessarily come down as fast across the regions, but within the regions they're coming down. So Asia Pacific, Latin America are good examples, as well as parts of Africa, where there's a unified approach to first lowering the boundary of the border boundaries. And that's helpful for you in terms of logistics. The big problem is the underinvestment in logistics systems in the emerging economies. Somebody talked about that here already, so I'm not going to repeat that.
Okay, my last topic in this section is next one out. So we've talked a lot about technology. What industry do you think will cease to exist by 2020 and why? So which industry will collapse?
Okay, I'll give you two. The first one is actually straight on the foot of what I was talking about, and that's the breakdown of the middleman or the middle distance between producer and consumer. So you can surmise that the retail industry is not going to be here anymore in the way we're accustomed to it. The high street shops are going to become nothing more than calling cards for the online entry and interaction. They're building the trust, they're building recognition, but that's about it. It's advertising, okay? Nothing more. Beyond that, of course, the retail in itself is going to be also no longer in terms of the multiples where we talk about the particular lines of product. We're going to be talking about retail, which is so atomized that which individual consumer will have the ability to customize what they're buying, if not design outright what they're buying. So platforms which offer an interface through the design between the consumer and then producer are probably going to become the big retailers of the future. The second industry, very quickly, is my industry, banking and finance. That's going to be gone as well. Again, because it is being empowered by the, if you want, by the platforms like the online service providers, online banking, and the rest of it. They're not yet there, but they will get there. And once they get there, what we're going to see is the integration of the investment banking, retail banking, the lending and equity issuance for the businesses, for the consumers, and again, blending the difference between the investor, business, and the consumer as well of the service.
Okay, thank you.
Cool.
We didn't get too many gongs. Okay, the next section is going to be what's the word? And in this section, I'm going to make a statement, and then I'm going to give Constantin a sentence, and he has to fill in the word and give us some context. So my first topic is hot topic today, Greece. So negotiations have begun this week, talks of the third bailout for Greece, up to about 50 billion's worth. So what is the outlook for the Greek market?
Okay, Greece is a horror flick with the reruns, okay? It's like a repeat nightmare, both for the Greek people and for Europe as well. Okay.
Oh, you're
So I have a few seconds there to explain that as well. The problem with Greece is that we all know what the problem is. It's debt. There's too much debt. There's no way any country. It's not an issue of Greece being in some way idiosyncratic. There is no country in a fixed currency union which can repay or fund or carry in the long run 175% debt to GDP ratio. Done. Full stop. Goodbye. Okay? So we all know the problem. We all know that we all are unwilling to solve the problem, precisely because we all know the solution to it, yes? Restructure the debt in such a way that you write it off rather than push it to the side and extend it into future maturity, okay? So for Greece to get out of this recurrent nightmare, it needs to do two things. First one is restructure its debt, which is easy, but nobody is willing to do. And the second one is very hard, structural reforms in the economy. Real reforms, not the IMF structural reforms, but real reforms. So Greece is in it for a long period of time, unfortunately.
Okay, positive outlook there. Sorry for our Greek friends. My next topic is Eastern Europe. So another source of conflicts and concern is Ukraine and its resulting economic shifts, some of which you in the room might be experiencing that at the moment. Russia used to be a rather substantial exporter to EMEA, doing about 100 billion's worth in 2013. So what is going to happen now? So export to Russia will
be 2009 redux. And I'll have to explain what 2009 redux means. It's basically a repeat of 2009. In 2009, exports to Russia have collapsed by about 30%. So in the second half of the last year, exports from EU into Russia have collapsed by about 18%. Now, this year we expect probably the same, if not more. The real challenge, therefore, of course, is not just the current export level, but because Russia is going through a very sharp adjustment, and the Russian economy always goes through sharp adjustments, when it tanks, it tanks. It doesn't tank by, say, 5 percentage points, goes boom all the way to the bottom, 10%, 1 year, and then it recovers. When the recovery happens, how do you, if you are exporting into the Russian market, how do you recover your market share? This is a very big challenge. So, for example, a week ago, the Rosselschoznadzor, which is the certification service for the agricultural exports, the head of it said that only 30% of the previous exporters into Russia will return into the Russian food markets after the sanctions are lifted. That's a scary number.
Okay, we might come back to that in the questions. My next topic is expansion. So, you know, we heard today the current average EMEA exporter exports to about 2 to 3 markets, but How many do you think a company should be aiming to diversify from risk, as we've just discussed, some risky markets, and capitalize on opportunities? So in 2015, you must sell in how many markets?
In your markets. I don't know how many markets you have, and I don't know how many markets you need to have, and nobody can tell it for you, because each of you have individual base of consumers, okay? The problem is that identifying those, of course, is very difficult. Getting to them is always very difficult as well. But even more importantly, your investment bankers, your funders are chasing you all of the time and telling you that you should have more and more and more of them. So again, go back to what we started with. Focus on the margin, focus on the risk-adjusted rate of return. Don't chase the macroeconomics alone. If you are to chase something, chase where there are people who are willing to pay for your service and not asking for a discount for it. That's kind of the basis, I would say.
So go where the dollar is. We've heard it twice today.
Where your dollar is, not somebody else's necessarily dollar is.
Okay.
That's...
Next topic, payments. So PayPal announced this week that it's just reached the 200 country mark. So fair to say, Constantin, it's a mainstream global payments platform. But what's going to be the next big thing in payment? What's next after PayPal?
I would call it either iCoin or G-Dollar. So, or maybe both, okay? The thing about payment system is payments is a platform, yes? It's a platform through which there is a transaction clearing, yes? PayPal is doing an excellent job, but PayPal is not delivering on other areas such as the direct lending, peer-to-peer lending, for example, business-to-business equity, investment banking, the new emerging finance areas as well as traditional finance areas. You can't really secure through PayPal trade credits, for example. You need to have the bank for it. What I suspect next move will be either Google or Apple or both, because these are the companies which have the capability and also have the pockets for it. Will develop a fully integrated platform for finance, which is fully mobile and fully embedded within all of these blows and whistles of technology, which makes it easier to transact and lower cost of transaction as well, while doing it secure. I don't see PayPal doing quite, because I don't see vision coming out of the PayPal right now for it.
You think they've capped?
I think they focus too much on the present, and I don't see the thought leadership coming out of them yet. On that.
Okay. Next topic, selling in the US. So you touched on this earlier. One issue faced with entering new markets is regulation. You talked about kind of regional regulation and stuff coming to the fore. But if we're to look at regulation of, let's say, the e-commerce market in the US, what do you think will happen in that space? So the regulation of the US e-commerce market will
be dysfunctional. Just as the regulation of the e-commerce will be dysfunctional in Europe as well. Several reasons why it is so. First reason is the pull factor for dysfunctionality, and that's a pull factor of the fact that both the US authorities and the European authorities are desperate for any sort of tax extraction. So you remember the good old Reagan dictum, probably none of you do, but I by age do remember, you know, about if it succeeds, tax it. Yeah, that's it, okay? They will try to tax it. The other reason is also there is a growing generational gap between the legislators who have no idea how online marketplace looks like because they don't interact with it. They still think that the Walmart is the breakthrough of major proportions. And of course, all of us, the rest of the humanity, which is in the younger generations in particular, only knows the online type of presence. So when we talk about tax, yes, in economics, we talk about friction, which slows down the rate of transaction and the quantity of transactions themselves. Perfect example here with the tax, yes? Online, everything is instant. You can't introduce even a tiny tax because that will reduce the whole purpose of online transactions themselves to being very fast and instantaneous. Sorry, I overran on time.
No, you're okay.
But I have a credit.
You're doing very well. I'm very happy. Yeah. Last topic in this one, globalization. So we've seen markets become much more open in the last decade. Gary spoke earlier about, you know, connections between US and Mexico and trade opening up. Will we actually have to stop segmenting at a country level and look at a regional level? So what will the next result of globalization be?
The next stage of globalization is finita la commedia. Because it's the end of globalization as we know it. It ended with the Doha Accord, and it was very clear, and it's still clear now, that there is absolutely no interest in it. What we're witnessing today are two simultaneous trends. On the macro level between the firms, it is a trend towards internationalization. It is absolutely I wouldn't say frightening, it's actually awe-inspiring, it's very positive to see the level of internationalization of business globally happening. Small businesses trade internationally, large businesses trade internationally. It's fantastic. But that is about risk diversification, new markets opening, and on the aggregate, it doesn't really translate into much, okay? It's not an aggregate economy growth as such engine. The second one is regionalization, and that's happening at the aggregate level, at the big level, governments and the likes. We have emerging regions, and I mentioned two big regions, North and South. And if you look at what's happening between the flows of the human capital, just take that, people with skills, talent, ability to work, entrepreneurship and the likes, they're now moving no longer from the South into the North, but more increasingly within the South itself.
Okay. On to our last section. This is odd makers. Because we're Irish and we like to gamble a bit, and it's Cheltenham Week for anyone in the UK audience. For those of you who don't know, Cheltenham is National Hunt, so jump racing, and it's a huge event. I'm going to make a few statements, and I'm going to ask Constantin to give me the probability or the odds of them becoming through. Okay, so very closely linked to the previous topic. Today's world, businesses are becoming less and less enrooted in domestic markets. So the odds that companies will start to lose nationality as they become truly global.
Okay, for multinational corporations, it is 100%. They're becoming amorphous, they're becoming generic. You look at, for example, larger brands from California from the 1990s, which have effectively morphed themselves into the faceless giants, okay? Whether on the US basis alone or even global basis. For other companies, that's about 10%, because only 10% of them will become multinational. Anybody else who wants to succeed will have to tell their own story, will have to narrate their story out of their local roots. There is a huge demand globally for actually story-based selling. Take a look at, for example, what's happening in the wine industry. There's a tremendous level of, culturalization of wine. We have the giants from Latin America, we have the giants from Chile, we have the giants from Australia selling around left, right, and center, but we have the French winemakers who go back to the even smaller and smaller terroirs, and they're producing smaller and smaller grape varieties. Northern Italians are doing that as well, and they're doing it fantastically well. It's a global market for them.
Yeah, your story gives you a unique personality to your brand.
Exactly. Not only that, but it also drives your margin, because nobody out there will pay you for the generic manufactured good, of a commodity, an extra premium. What they will pay you is for something that is unique, a conversation piece. I witnessed a friend of mine paying about $500 for a bottle of one sherry in particular, because it was produced in the year when the Stalingrad battle took place, 1943. Yeah. No, exactly. And he bought it because he will tell the story to his four-star general friends, out in the US about that bottle.
So keep your story and chase the dollar, is what I'll say. So next area, foreign force. So any Italians in the house? Yay, make yourself heard. A few. Okay, so you're very patriotic. A couple of years ago, when Italians spent money online, they would actually only spend it on Italian online retailers. So you're really patriotic. But now, as of last year, almost 50% of the Italian euros spent online were actually spent on non-Italian websites. So the question that I have for you, the odds that I want to know is, will e-commerce dominate in patriotic markets like Italy?
No, of course, e-commerce will be present in Italian markets. It will be equally distributed, in my view, by the same regions that the whole Italian economy is divided. Is there really Italian economy? I mean, I can talk about that a little bit because my spouse is Italian. But, you can have the northern Italian economy, which will have a tremendous presence, both in terms of exporting out of it and also importing into Italy on the e-platform itself. And then you're going to have the central Italian economy, which is kind of will be like, meh, so-so, così, okay? And then you will have the 10% kind of area of development, which will be the southern Italy. Remember, it's all about demographics, yes? We, in my age, people are not really good adopters of anything new, okay? We can be forced into it, we can be dragged into modernity, but we really are still resistant about it, okay? It's uncomfortable to have the phones which don't have a cord attached to them, okay? But, yeah, we keep
You're
losing
not that
them,
old,
yes?
Constantin.
No, I'm not at all, but I'm getting there, I'm getting
compliment.
there. But in the case of Italy, the problem is demographics, and you need to find the pockets of younger, early adopters to really drive that change again. So.
Okay, my next topic is Bitcoin. So Bitcoin was uber hot last year. Its market cap was capping out at about 14 billion. More recently, it's capping out at about 3 billion, and the future is looking a little less rosy for it. So my question to you is, will it become a shelter for like black and grey markets and ideological radicals? Or will we see Bitcoin become a truly mainstream currency? What are the odds that mass market retailers will start accepting Bitcoin by 2020?
I would say it's around 10 to 20%. And the reason is exactly what you identified there. Okay? The fact that Bitcoin's strength is anonymity of transaction, or the promise of anonymity of transaction, though it is not perfectly anonymous, but nonetheless, is driving up the wall the governments around the world. So if the volatility of Bitcoin does not kill it, which, by the way, is huge volatility, it's so high that there is no other financial asset or instrument which has the volatility of Bitcoin currently, then the governments will nail it. They will nail it by restricting access to it. There are no payments clearance systems which will be kind of internationally accepted. And it is at risk of sliding into becoming effectively the black market kind of vehicle. But even black market doesn't want non-convertible, high liquidity risk and high counterparty risk currency. So they probably won't do it as well. There is certainly a room for cryptocurrencies beyond Bitcoin, and I suspect that these cryptocurrencies will emerge. As I said, it will be either iCoin or G-dollar or both.
Okay. Next topic, euro. Much talked about exchange rates and their significance and fluctuations lately, but what are the odds that the euro will devaluate even further this year?
Against the US dollar, 90% probably, if not higher. The reason for it is because euro has nowhere to go but into where it's being dragged reluctantly. Yes, the quantitative easing, the trying to do something in terms of the increase in the quantum of money in the economy, and of course the debts. Let's not forget we're living in one of the most indebted continents in the world right now, both across the household debt, the company's debt, and also the government debt. All of that requires some sort of the very significant devaluation over a very long period of time. So I suspect that the euro is going to continue going down, which is good news for the exporters, as long as those exporters are not reliant on producing and growing their production capabilities and investing into the capital base and the likes as well. So.
And how quickly will we see recovery?
Oh, in terms of the exchange rates, I don't really, it's very difficult to predict in terms of kind of on the trend itself. Let's put it this way, there's a very big problem, and I'll overrun there, but I do want you to keep in mind, a lot of us think about the exchange rates as something separate, as a value of currency. That's true for your business. But for all of us in the economy, they are not actually divorced from the interest rates. If there is any recovery in the euro, in relation to other currencies, what's going to happen simultaneously is the interest rates are going to rise in the economy as well. And there are economies like Greece, Italy, Ireland, Portugal, Spain, but also Belgium and also Holland. Denmark, by the way, which is not Eurozone, but also is connected to it as well, where there is a huge levels of household debt in particular and the corporate debt. And when that happens, when the interest rates rise, those economies are going to start feeling significant pain and significant pressure. So be careful what we wish for in terms of the appreciation of the euro.
Okay. Next topic, second last topic, Airbnb. So we have some travel clients in the house today. So Airbnb are our neighbours here in Silicon Docks. They're only 2 streets over. But do you think their business model will ever prevail over traditional hotels and guest houses? So what are the odds that Airbnb and such will hold more than 50% of the market?
Well, I think it depends on what we define a market. In their own kind of market, they might actually be successful and rise to 50%. But the overall hospitality market is very diverse. And I think ultimately to expect a singular platform to capture that, you have to have commoditized service in order to be able to capture it into 50% across one particular platform. It works in, for example, finance, though everyone thinks that it's a neurosurgery, but it's not at all. It's very simple. It's commoditizable. But in terms of the offer such as personal, such as my travel, and especially the travel for leisure and the travel for the kind of discovery purposes and cultural purposes, that is very difficult to commoditize. And I don't think Airbnb or any other competitor, it's not an issue of their business model, unless there's a huge change in that business model, will be able to get to 50% market share. And I think that's the great news, because I hate to see sectors being dominated by 50% or 70% by one particular player. I love the room for small guys and girls to play.
looking at anyone in particular?
The what? No.
Constantine, you haven't been paid yet, so... Last question before we open it up to the floor for your questions, so please get them ready. Staying at home, so like as an economist and a visionary, do you believe that such a thing will exist as a local business in 10 years' time? Will we even talk about export, because will everyone just be an international business, or where do you see that panning out? So what are the odds that all businesses will be international businesses by 2025?
Internationalization is a huge dimension. So the odds are there between 100% and 0% and nothing in between. 100% for some businesses, 0% for a very small percentage and shrinking percentage of total business. So let me start with the 0%. There will always be businesses which are reliant on subsidies domestically, which are close to governments, and therefore, we can call it corrupt, or you can call it, government's pets, whatever it is. They always will exist. They have no pressure, and in fact, quite often have no ability to internationalize at all, because their cash flows are restricted and because their presence is in the market restricted and the likes. Set them aside, they're shrinking because the governments are running out of money. I mean, they're already taxing in Europe about 50% of the entire economy, taken out in terms of taxes and government expenditures, 48% in Europe, yes? I mean, how far else can you go to subsidize the behemoths out there and the companies which are reliant on subsidies in general? Anybody who is not relying on subsidies is 100% internationalizable and will internationalize over the next, say, 5 years.
Okay, thank you. That concludes our 3 sections. Now we have some time for questions. We will get the Android out to... So if you have a question, please raise your hand. Oh, please. The Android's low. Please whisper sweet nothings into his ear so we can hear you.
My kids would love that Android.
Yeah.
You do the talk. Hello. All right. So this is a really broad question, which contains a few areas. Where do you see the future of the petrodollar, given Russia's lead in the BRICS and their stockpiling with China to maybe potentially release a gold-backed currency, coupled with the current oil crisis we see and crash led by Saudi Arabia?
Okay, huge question. I'm very enthusiastic about the possibility of the challenge emerging to the United States dollar predominance as a reserve currency. Why? Not because I don't like American dollar. I spent many years in the US. My education comes from the US. So no problem there. But I think the competition is always healthy. Okay? I think China and the BRICS in general are still a bit too far removed from it. But what's emergent in terms of the efforts to create an alternative payment system to SWIFT, efforts in terms of de-dollarization of their economies, both in terms of sovereign wealth holdings and the likes of the central bank holdings, but also individual holdings, is very exciting, very interesting. It's a whole theme of internationalization and regionalization, which is playing out through that as well. I think we're 10 years or so away before a serious challenge is mounted, and that challenge becomes really present. But it certainly is emergent. That offers great opportunities because, for example, you take payment system, SWIFT system, okay? We've relied effectively on a monopoly which has been proven recently by the United States to be subject to the political dominance and political pressure in the case of Iran, and currently is being proven to be so also in the Russian case. We can't have the banking and financial system operating around the world on the basis of geopolitical considerations and political pressures. We have to have it operating on the basis of business rather than the politics. Take politics, deal with them separately. So I hope it answers to some extent.
Yeah, probably not given enough time, but that's okay.
We can go for another 2 minutes. Okay.
We have another question here.
First up, thanks a million, Cera and Constantin. Hugely entertaining and interesting. Question I have for you is, earlier on in the introduction, Gary mentioned or suggested that Google feels Turkey's really sexy right now as an economy. So Constantin, I was hoping you'd give us your perspective on Turkey.
I like Turkey. The only problems I have with Turkey is the high level of, if you want, high level of risks, which is always present there. It's both regional and internal risks, okay? There is a very modern Turkey, which is fantastically enabled, capable economy, which is growing not just on a kind of traditional replication and low margin activities basis, but now increasingly growing on high marginal activity basis, bringing in its own design, bringing in its own innovation, R&D, and all into it. And then behind there is the vast Turkey, which is kind of still lives in that strange world of the early 20th century, okay? So as long as that balance remains peaceful, and I do think it will remain peaceful beyond any doubts, I think Turkey is a fantastically interesting play. Politics, again, think of the politics as being effectively reflective of the pressures which are building up demographically and internally. Think of the business as shouldn't be dependent on politics, including your risk as well in that country as well. So I think Turkey is a great, interesting example of the country which goes in the same diversification basis rather than locking in back into the Europe. They're drifting away from Europe exclusively. They're kind of trying to bridge the Central Asia, Russia, and also the Middle East at the same time as transact with Europe as well. Very interesting market.
We have time for one more question. One here.
Thank you, Professor. Just based on your suggestion that we're chasing for like profit margins, but Russia has been a great market for so many years until the past several months. So do you think it's the right time to enter Russia right now? Because as you said, the economy has gone bad, like very quick, but will it bounce back very quick too? So is it right time to enter Russia right now?
Okay, it depends from where you're entering and with what, yes? If you are trying to enter, for example, with a military industrial equipment manufacturing, you know, not a good idea probably, okay? Especially if you have contracts in the United States at the same time running, okay? If you are entering, you know, okay, where there is a very tremendous interest in place in Russia, even in the sectors which are somewhat restricted, okay? Say, for example, food. Because the food imports are restricted, what is actually booming right now is the investment in agriculture and food processing as well. You can't go into Russia right now and expect immediate return and immediate recovery within, say, a year or 2 or 3. Think of it as a little bit longer play, especially if you're coming from the non-European market, non-Western European market, okay? You're certainly looking at the building bigger and bigger and bigger market share and squeezing and preventing re-entry by the European competitors into that market. So I would be very bullish. Also remember that, you know, there's a good old adage in terms of the investment. It's more relates to investment markets, but also applies to business as well. You want to enter the country when there is blood in the streets. Now, let's hope there is no physical blood in the streets, okay? But certainly in terms of when the country is going through the period of contraction, you are witnessing the opportunities which are opening up. Those who leave that boat is probably not going to come back very quickly. That opens up the window for you to come in. There are some interesting, logistics is a great sector for Russia as well. Russia is becoming increasingly a channel for trade with Asia, with Central Asia, with again through the kind of India as well and Middle East, and it's getting coupled with China as well in terms of the trade flows globally into the West, yes? So logistics is going to be a huge, huge, huge narrow point in that pipeline, Russian logistics. So investment in that area is not restricted right now, and development in that area is not restricted right now by any sanctions. If you can afford doing that, go in for the long run there.
Thank you very much, Dr. Constantin Gurdgiev. Join me in appreciation.
Oh, well, thanks.